A very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. Tick-tack, tick-tack. The year 2012 is gradually grinding to a close. And that means that a new year is in the offing. It is our prayer that Almighty God makes it possible for you and I, for all of us, to witness the year 2013. The recent unfortunate loss of lives involving the governor of Kaduna State and the former National Security Advisor brings into bold perspective the fact that we are all here by God's special grace. And it is our prayer that He accepts the dead into His bosom and that He consoles the family members left behind by them. Today on Tax Matters, we are going to be discussing voluntary tax compliance. And to take us through, to guide us, is Mr. Innocent Ohagwa, the Director of the Large Taxpayers Department, Non-Oil, at the Federal Inland Revenue Service Headquarters in Abuja. Mr. Ohagwa, you are welcome to Tax Matters. When you say Large Taxpayers Department, Non-Oil, what work does your department do?
Okay. The large tax non-oil focus on those large taxpayers that has turnover of 1 billion and above, excluding oil and gas, mainly manufacturing companies, banks, telecommunications, other lines of business that the turnover threshold is 1 billion and above.
Those are the big boys. You deal with the big boys. Yes. Okay. Non-oil, then oil and gas.
Yes.
Why the dichotomy?
Yes. You know, before now, Nigeria relies so much on oil, and oil drive everything. So, and the intention of the government is to show up a non-oil revenue. So, as a result of it, emphasis is given to non-oil sector to ensure that if it does not even surpass oil, it should become the benchmark for development of the country.
Okay.
So non-oil is very, very vital. And also our funding is based on non-oil, not on oil and gas.
The funding of the
funding
FRS.
Of FRS is based on non-oil.
To keep you on your toes.
Yes.
Okay. So the activities of this Large Taxpayers Department is strictly different from Abuja?
Yes, it's different from Abuja, but we have at each of the regions, we have large tax offices. We have 2 in Lagos for non-oil, 1 oil and gas. In Abuja, we have 1 non-oil. We have in Kano.
Okay.
That is 4. But oil and gas, we have 1 in Port Harcourt. We have 3 in Lagos.
Okay. Now, you are here to talk about voluntary tax compliance.
Yes.
What do you mean when you say voluntary tax compliance?
Voluntary tax compliance is a situation whereby a taxpayer, an individual or other entities comply to the letter of the tax law by complying as and when due without any prompting in the form of enforcement.
Okay.
Enforcement can be in the form of writing you letters, imposing interest and penalty, or at the extreme, sealing your organization. But if you can do it voluntarily, without any prompting, as and when due, then you are voluntarily compliant. But however, what drives this attitude is dependent on the type of the taxpayer. You can have about 4 sets of taxpayers. Those who ordinarily will not want to pay. Those ones, the law will take its course in full. We have categories of those who don't want to pay, but when you pressurize and encourage, they will comply. Those ones, we call them resistors. Then we have categories we call triers, those that, want to try and do it, but they don't always get it right. And these categories needs to be assisted to do it right. And we have the last category, those we call supporters, who are willing to comply with the letters of the tax law. They file their returns, they pay before the due date. This category of taxpayers, we need to make it easier for them to be able to continue to be good compliance taxpayers.
In talking about those 4 groups,
Yes.
one group is very interesting to me.
Yes.
You say those who will always get it wrong.
Yes.
What are you talking about?
Yes, that is part of why the service management of the service embark on segmentation. They remove the large tax, those that have 1 billion and above. They have the medium taxpayers, those 200 million and 999 million, and then the micro and small. You find that the category of micro and small, some are really willing to comply. They are not resistors. They are not those that are totally disengaged from the system. They want to pay, but they don't really have the wherewithal. They may not be able to pay consultants. They may not be able to prepare themselves. If you watch our program recently, the management through the Director, Taxpayer Services, did a record-keeping business assistance workshop whereby the taxpayers are encouraged and taught on how to keep records. These are efforts to ensure that those who try but will get it wrong, they do the right thing, keep good books, file their returns, and pay as when due.
Okay, we can confirm what you're talking about because 2 weeks back, that Directorate of Taxpayers Services organized 4 workshops simultaneously in 4 locations in Abuja, Gwagwalada, Area 11, Wuse, and Gariki. And we're pleasantly surprised to see that the FRS has gone to this kind of length. There's this one, Business Support Program, Purchases Day Book. Another one that was given to participants at that workshop, Sales Day Book. And yet another one, Simplified Cash Records Book. I was astounded that you could go to this length. And two copies of each of these were put in the bags given to participants. And I just said to myself, so that some people have problems. It's not as if they don't want to pay tax, but they have problems. They can't employ accountants, sitting accountants. Even if they do, they cannot employ the services of auditors or tax consultants. So you are ready to help them. But in your own case, you are dealing with the big boys. Do you have problems with the big boys?
No. In terms of record keeping?
No. Okay, there may be other problems.
Yes.
Okay, we'll come to that. Now, they say no law, no offense.
Yes.
You have told us what voluntary tax compliance is about. What are the legal underpinnings? What laws, tax laws, or regulations touch on tax compliance?
Generally, all the tax laws, makes it mandatory for every taxpayer, to pay tax, prepare returns, file them, pay as when due. But the issue of voluntary tax compliance became, an issue from Decree 2 of 1991 when self-assessment was first introduced. And by that time, it was said that if you have 1 million and above, you should compute your tax and file your returns and pay within the due date. It was also inserted in the relevant laws. In CETA, it was 40 AA, making it mandatory that you compute the tax. Before now, the revenue offices, you need to wait till revenue offices send assessment to you. If the assessment does not reach to you, you do nothing. If it is even misses, if the assessment misses, you do nothing. But with the self-assessment scheme, encouraging voluntary compliance, you need to, by the provision of the law, to ensure that you prepare the returns yourself and then pay the attributable tax within the due date. And this is to encourage everybody to voluntarily comply. And recently, 12th December last year, the Minister of Finance released a guideline on self-assessment That
2011.
Yes, 2011. So that guideline to further, solidify the provisions of the law, and ensuring that by January next year, this year the service has been quite magnanimous in not going to the whole length, but from January next year,
2013.
Yes, really, it's going to be a different ballgame.
Full self-assessment.
Yes.
So when you talk about self-assessment, when you talk about tax compliance,
Yes.
The FR is not just doing it for doing sake. You have laws backing you.
Yes, yes.
Okay. At what point do you consider a taxpayer having breached the law? At what point?
Yes, well, at the point, if you don't file on due date or pay, because it's concurrently filing and payment. If you don't file on due date, there's a sanction. If you don't pay on due date, there are other ancillary offenses too. If you misstate knowingly misleading information, or if you embezzle the deductions like VAT, withholding tax deducted on behalf of the government. There's also penalties for those. But fundamentally, you need to file your returns and pay before the due date.
Okay. You spoke about offenses.
Yes.
You spoke about sanctions. Can you mention a few of them? Because we're talking about compliance here. We're talking about the fact that you have laws, that is the FRS, you have laws backing you.
Yes.
What sanctions are in place for infractions of the law?
Well, there are many of them. If I have to start with the company income tax, we have various taxes, VAT, CGT, tertiary institution, trust fund, and all the other taxes. Each of them, there are offenses and penalty. But let me talk about company income tax. If you are supposed to file returns and you do not file, or you file late, for the first month you pay 25,000. Each of the months the returns is delayed, you pay 5,000 naira on top. And in addition, you could also be convicted for an offense for 100,000 naira and or 2 years imprisonment. This is specifically for filing on returns. But when you misstate or you submit returns that are misleading, FR Establishment Act Section 40 to 49 are all on offenses. You do 200,000 naira fine on conviction and 3 years imprisonment. So without option, either with option or both. So there are many other offenses, but in view of time, we will not want to take on that.
Permit us to pause for a while to take a quick look at the business support program that Mr. Ohagwa touched upon a few moments ago. On Monday, the 3rd of December 2012, the Taxpayer Services, Policies, Processes and Programs Department of the Federal Inland Revenue Service held sensitization seminars at 4 locations in the Federal Capital Territory of Abuja on simplified business record keeping for small and micro enterprises. The seminars were held at the 4 venues simultaneously and had the full support of SMEDA, the Small and Medium Enterprises Development Agency. Mrs O.O Adediran is the director of the TSPPP department at the FRS headquarters and the chief host or hostess, if you like, of the seminars. Madam, we just concluded the business support program organized by your department, and we wonder, why did you consider this necessary? What is your business with my business?
Thank you very much. Your business is very important to us because it is from you, the small and micro business owners, that we get tax. And we are interested in your business because we want you to keep good records, because we know that majority in this sector, in this segment, don't really know how to keep good books. And at the end of the day, they even pay more taxes than they should. But where they keep good records, they will be able to file proper returns and be able to pay fair tax. That is why we are interested. For number one, for the knowledge. They need to know. They need to know what fair tax they are to pay. They need to know what records they are to keep. And they need to know, even you see that we collaborate with SMEDA, they need to know where to get funds to be able to grow their business, because we rely on them, because they are our hope in Nigeria. More importantly, in the area of non-oil taxes.
This has been held in Abuja, the Federal Capital Territory. Do you have plans to take this further afield?
Oh yes, we are going around the zones. In fact, even in Abuja, this is a pilot that we have run today. We are still going back to see how they are keeping the books we have put them through today. And we are engaging resource persons to sit one-on-one with some of them that may still require more information and more education on how to keep their books. After that, we are rolling out, we are going to other zones. We are covering nearly all, in fact, we will cover the whole zones in 2 years. We intend to cover the whole zones and to cover the, nitty-gritty of the business sector, or most especially the small and micro businesses and the enterprises, those that are not limited liability companies in the FCT fully.
That leads us to our next question. Every time that we hear FRS officials talking about small and micro businesses, we wonder if these companies are not limited liability companies, what is the business of FRS with them?
Okay, number one, business of FRS with them is the taxes of the individuals that are working with them. In the first instance, those that are working with them, the moment an enterprise engages minimum of 5 staff, he is expected to register with Federal Inland Revenue Service and then start remitting their taxes if that enterprise is resident in Abuja. And where they are resident in Abuja, also in addition to the taxes of individual, they are expected to be filing VAT returns, to be filing their VAT returns on monthly basis and be paying the VAT that they are collecting with their sales to Federal Inland Revenue Service. So we are interested in their business in that aspect. Also, those that are non-resident of Abuja, that are residing in other states, though their own personal income tax are payable to the states of their residence, but the value-added tax is payable to federal government. And also where they are engaging, because some of them we may think they are not having expatriates, but some of them may have expatriates. The taxes on the salaries of the expatriates are payable to Federal Inland Revenue Service.
So everybody has business with FRS?
Exactly, yes. More importantly, when they are dealing with valuable goods and services.
Now, what be this? Make it say where you? The thing where you said me too much, calculation is where okay?
Madam, it correct now. Now the price be that.
You are playing with fire, so go. Me, I know say they never search fat for bikini. So you want to play me, why you? You want to teach me, Abi?
Madam, now everything with the add back on top. Now so with the seller.
Madam, you dey correct o.
Good day, madam. Any problem? Problem there.
The thing be say una not supposed to charge VAT for baby items and other things wey dey for VAT exemption list.
Sam.
Chai! This one na wayo receipt o. Correct receipt suppose contain the things wey you buy and the VAT wey dey on top. Then other items wey not get VAT, you go put them separately.
Madam, I apologize, You go change that.
Change that.
To pay VAT dey compulsory. Now government they use to make our life jolly, to collect and pay sharply to government. Is they correct?
FIRS, it pays to pay your tax.
Welcome back. We are still on to Tax Matters, and we have a guest in the house in the person of Mr. Innocent Ohagwa, the Director of the Large Taxpayers Department, Non-Oil, at the Federal Inland Revenue Service Headquarters in Abuja. Mr. Ohagwa is talking to us about voluntary tax compliance. Mr. Ohagwa, before we went on break, you touched on self-assessment as a compliance tool.
Yes.
And you said that in 2011, the Minister of Finance signed the regulations, and that you have been magnanimous enough to allow us to enjoy a holiday, a moratorium in 2012. That by January 2013, it will be full implementation of self-assessment. Has the message sunk in?
Yes, I will say yes, and then I will further explain. You know, if you look at the current segmentation the management of Federal Revenue Service carried out, that segmentation is also giving credence to different types of taxpayers and what they will require. The large tax, where I belong, definitely they are doing very fine. The medium tax is also doing very fine, though we could still do better. The micro and small, definitely, that is the level where we still have much to do. And the service is not relenting in ensuring that full compliance is ensured.
You are convinced that when the time comes in 2013 that you will have less problems than you are having now?
Yes.
Okay. Now, at several fora, we've observed you talking about the activities, I don't want to use the word that is on my mind, antics of tax dodgers. And even on set today, you have spoken about those who, no matter what you do, will refuse to pay. Can you share with us some of the antics of tax dodgers that you have come across from time to time?
Well, it's some of them, you can say a company that is alive doing business will claim to be dormant, or a company that has been in business will tell you that it has not been getting businesses, that has not been doing anything. At times they relocate, or proceed to incorporate other companies. But those antics will not go far, because with policies put in place, like tax identification numbers, third-party confirmations, use of withholding tax and VAT schedules, using our web portal platform, and then also to third-party confirmation, because bank statement returns that is mandatory under the law for banks to make to Federal Revenue Service. When you say you are not operating and the returns we receive from the banks say otherwise, the system will still come after you.
But how do you get my bank statements? Is it not what I give you that you take?
Well, bank statement is the taxpayer.
Yes.
Are you getting me?
Yes.
But there are also independent returns. Banks are expected to return to FRS under the relevant law. Yes, FRS Establishment Act and the Companies Income Tax Act. There are sections there that enables banks to make returns to Federal Revenue Service. We use information from those sources too.
So you have measures to checkmate the antics of tax dodgers. It is on that note that we have to draw the curtains on today's episode of Tax Matters. Time is not exactly on our side, but we do assure you that the remaining part of this interview with Mr. Ohagwa will come to you in a subsequent episode of Tax Matters. In the meantime, we want to most sincerely thank him on your behalf. Mr. Ohagwa, thank you for coming on to Tax Matters. And to you viewers out there, thank you for watching. Merry Christmas in advance and a happy year 2013. Bye for now.